Hey there, welcome to the Stocks with Josh show. Today's show is about a signal that the market's been giving us that I just don't think we can ignore anymore. And that's the US yield curve inversion. You've heard a lot of talk about it, but I'm going to break it down with some very simple to understand language and to talk to you guys about how important it is and what it's telling us. This signal has not been at the level that it's at since 1980. Over the past 50 years, this has 100% of the time predicted accurately a coming recession. So in simple terms, what this is all about is it's about money that's flowing into treasury bonds, but it's flowing into bonds either incorrectly or in an unusual pattern. So the government basically sells bonds with different yields. The yield is an interest rate return. It's what we get for buying the bonds. Normally the ones that mature in a long amount of time, like the 10-year, they pay the most yield. And the ones that mature in a shorter amount of time, they pay a smaller yield. So for a while, it's been flipped upside down. So what this is indicating is that institutional money is avoiding cash and stocks because of a potential depreciation in value. That basically means that they don't want their money to get tore up from the floor up. They've been flooding money into short-term bonds to protect the value of their wealth and to get the higher yields, which they're able to get because the Fed has been driving up the interest rates, which drives up the yields of the bonds. So this was first seen as an inversion between the 10-year and the 2-year Treasury bond. Those were the first two that inverted, but since then there's been other inversions that have been continuing. We first got this signal in March of 2022, and the bottom line is if we had taken it really seriously and we sold all of our stocks and our crypto in March of 2022 and we loaded up on put options, you would have saved yourself a ton of losses and you would have made a bunch of money. So these inversions are more than just a sell signal. They're a warning about what is ahead. 100% of the time, they've warned of a coming recession. Now, we saw this in the past. In January of 1989, we got that same inversion before the famous Black Friday crash. And again, in March of 2000, before the dot-com bubble burst, and in 2006, before the great financial crisis of 2008, dubbed the Great Recession. And now again, we see it in March of 2022. The inversion signal is stronger than it has ever been in the last 20 years. And so the correction that we've seen in stocks is very likely not the big move that this signal is warning us about. So there is obviously a rough road ahead. And the question is, should we sell all of our stocks in crypto and get out of the market? Well, I'm going to share my game plan with you guys today, and I'm going to share some other important news stories. Thank you, fam, for hitting the like already. And if you're new to the page and you guys need some straight talk on these markets, then hit the subscribe and all notification bells to join the Stock Josh family. Okay, I want to talk with you guys about the parade of the 1%ers that have been out hitting the street, warning about the looming recession. In particular, Jamie Dimon was on CNBC talking about the coming recession in 2023. If you don't know who he is the CEO of JP Morgan Chase Bank, America's largest bank, with a market value of around $380 billion. I always love to compare market value of companies to Apple, which has a $2.4 trillion market value. This is another company where Apple could probably go in and just buy the company cash. I'm not going to play the whole interview for you guys, but I wanted to share what I heard versus what he's actually saying, and I'm going to comment on the other key points of the interview. So go ahead and check this out.
I think there's so much happening right now around the globe. We've been waiting for this conversation. You know what's happening in markets. You know what's happening in the economy. You know what's happening with consumers. What do you see right now? I think everybody was concerned, what was it, 6 months ago when you said a hurricane is coming, you better prepare?
They're spending it in different things. So all you speakers up here, some are doing better, some are doing worse. That's a tremendous sum of money, and they have $1.5 trillion still in their checking accounts, more than pre-COVID. So the spending is down. That's the good news. And the companies are in good shape, too, by the way, and their balance sheet, consumer balance sheet is in great shape. The other news, which is not good, is that rates are now, 4% on their way to 5%. Inflation is eroding everything I just said, and that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about.
So what he was actually talking about, he starts off with saying how good the American economy is and how much money the consumer currently has available to them. I think he said that because he wants to make the point that Chase Bank is a strong business, money-making machine, and he didn't want to go on national TV and suggest that his business was in trouble. So once he got that basic premise out of the way, he then focused on the risks ahead in the market, which he said were largely geopolitical risks which could not be entirely foreseen, but that we were in a basically scary political environment in the world. And then in the end, he largely suggested that the US economy is going to do way better than other countries, but that it would be very important that we find the right leadership in Washington to represent our interests on the global stage in the years ahead. But I think his main goal for doing this interview was FUD. He basically said that the American people had $1 trillion in cash in the bank. And if they're not careful, they're going to burn through it all in the next 6 months. He just wants you guys to stop spending your money. Honestly, these people really think that your money is their money. As soon as you make that deposit, that money that they're holding for free immediately gets lent out and starts making them money. And the real truth is that they don't have all the cash that we gave them. All we see is some digits on our phone, and it's not terribly different in my mind than the Bitcoin and the ETH that holders over on the FTX platform thought that they had. They didn't have any ETH or Bitcoin. All they had was basically some FTT tokens propping up their company. And I want you guys to see this video that further underlines this point.
So you were requesting, my name's Pete, by the way, I'm the financial center manager. You wanted us to order some cash for you?
You guys talk like it's a secret. Yes, I wanted to get money.
Yes.
100,000.
Okay. So we can have that available to you by Tuesday of next week.
Is there any way to have my money quicker? I don't have till Tuesday of next week.
There's not a way that we can help facilitate that any faster. The only other way that we can do this is we can get you a cashier's check for $100,000.
I need cash. I don't need a cashier's check.
Well,
See, this is the problem with the bank and financial industry is like, you guys have like access to all my money. Like right now, I want to be able to do something with my money, and I need it.
Okay, and we're not keeping it from you.
Yes, you are.
But in terms of cash, you're going to have us order that so that we have enough cash for all of our other clientele. So
you're supposed to be able to have cash for the people that have actual money in the bank. Like this is a scam.
Each one individual bank can't have.
But
but
today is Thursday, right?
Yes.
Today is Thursday, so there should be time between now and tomorrow or Saturday where you guys can make calls to all these different branches out here to supply a banking customer. Because here's going to be the issue. If you don't give me my money, I'm going to close this account today. Because this is the second time I'll come into the bank and try to get money, and you guys play this game with me. See, it's ridiculous that I can have that type of capital in the dang old bank and not get the respect where I can come and pull my own money out. That's my hard-earned money.
I'm trying to dispatch.
But it's every time I go into a financial industry, bank, I did this in Vegas, I've done this in several places, you guys don't give me my money. Like, it doesn't matter if it's 10,000, 20,000.
The guy looking for his money is a guy named Tony the Closer, and he was simply trying to get some of his hard-earned cash that he had put on deposit at the bank. He said, we can give you a cashier's check for $100,000. I mean, I don't know what he expected him to do with that. Like he's going to run down to the grocery store and try to get his 100K. Tony the Closer is trying to teach the American people a very valuable lesson. They got your money, but they don't have your money. And if you need your money, good luck. He said, I did this in different places several times with the same result. So Jamie Dimon of JP Morgan, I just want you to know I see you, I hear you. He's basically telling us to be careful. Don't spend all of his money, that $1 trillion in deposits. Okay, at the end of the video, he also talked about how concerning the 10-year and 2-year yield curve was. I didn't play that part. He said it was unprecedented. And what that means is that it hasn't happened this badly before. Nobody really knows what it means when the yield curves get this inverted. And if they don't know what it means, then they don't really know what the end result will be. So what can you do to get prepared? I'm going to give you guys a couple plays, but before I do, let me share an offer from the moomoo investment app. I use moomoo every day to trade, and I have a community page and a daily chat group over on the app. Moomoo is trying to burn up their 2022 marketing budget and is giving away stocks for Christmas. If you open and fund an account, you can get up to 20 free stocks. Yes, that's 20 free stocks potentially valued as much as 40K, and they have a chance at entering a sweepstake for another potential 60K win. I use and trust moomoo with my money because these guys are a licensed, registered, and insured broker out of Palo Alto, California, and because they have the smart tools that I need to make trades throughout the day, plus a great community where people can chat and share trade ideas. Click the link in the top pinned comment, get the free stock, and you can start your investing today. This offer is only available in the US, China, and Australian markets. The bottom line, guys, is the retail investors, they get dealt the toughest hand in a market downturn because most of them don't know how to hedge their investments or profit from markets falling. I think it's important when facing these types of markets to remind you that there is always, every day, an opportunity to make real money in the stock market. But learning the trade is something that many beginners don't take seriously or they give up on very quickly. Now, I'm going to share 2 pitfalls to avoid and a couple stock ETFs to make profit on when the markets crash. All right, first off, let me just make a couple points. If you're going to invest your hard-earned money, you have to stop giving yourself permission to not know what you're doing. You need a real strategy to grow and learn. You need to get some learning goals, especially as we're getting to the beginning of the new year. Stop setting the goal to make a certain amount of money every day. Rather, set the goal that you're going to learn something that you don't know how to do right now. You're going to learn something new every day. Second, if you're losing money, you need to stop the bleeding by avoiding 2 things: over trading and overexposure to loss. Limit the number of trades that you're going to do. Stop trying to force a trade every day. And if you make a trade, limit the amount of money that you have at risk. If you have $1,000, only buy $100 of a stock at a time and then see whether you've made a good or bad decision. Don't go all in on one decision. You want to cut your losses and you want to load up on your winners. Some of you guys are losing money and you're not doing anything to change the strategy that's caused you to lose money. Currently, I'm in 2 ETFs, 2 small positions at the moment. They're not heavy positions, but they have been profitable over the last week. I'm in the SQQQ, which is an ETF that profits when the NASDAQ falls. It's a 3-to-1, which means that if the NASDAQ falls 1%, the SQQ goes up 3%. I'm also in the SPXs, which is an ETF that profits when the S&P 500 falls, and it's the same thing. It's a 3x. So if the S&P 500 falls 1%, the SPXs goes up 3%. Both are in profit right now. And finally, consider using the months ahead before the next leg down to simply save up some money, cash up, and get ready to buy stocks on a massive discount. Use this next couple of months as a learning period to begin to know how to do your charts better, even explore options. If you need to learn more about hedging your investments, then hit the like. Become a friend of this page by subscribing, and you can join the family by hitting all notifications on that big YouTube bell. The next 10 days in the market, in my opinion, are going to be huge. We have the CPI and the Fed rate hike coming up next week on the 13th and the 14th. But hey, let's keep this conversation going here and over on the moomoo app. Peace and blessings, my friends. Take care.